What's going on, everybody? I want to do a video about Upstart. This is going to be a pretty quick video. So this is a company that kind of recently actually got on my radar. I guess I missed the memo. They went public earlier this year, and it has rocketed over 10x from about $30 a share. We can see it's up 20 points today, 6%. It's up to 341, and in the 52-week range, it's actually gotten as high as $400. And so, needless to say, I wanted to dig into this a little bit more. Even I didn't even know what they did. All I could, kind of figure out was that everybody talks about it on CNBC like every other day, and so to some degree, I feel like there's a little bit of pumping going on here. But anyway, let's get into it and kind of my take and how I think you might be able to kind of trade around this or form an investment position as well. So Upstart is sort of an artificial intelligence lending company that uses what they're calling sort of non-traditional metrics, such as your education, your employment history, things of that nature. And they take all these different data points, and they sort of, I guess, sell that to banks so that banks can figure out sort of your credit worthiness, right? And so this sounds sort of like, aren't there other tools that do that? I guess what Upstart's sort of value proposition is that they take a lot of different data points rather than kind of the traditional things that that their competition uses. And they claim that they can, kind of algorithmically calculate who, sort of a better credit score for you, if you will. And so this is advantageous for a bank because then banks could theoretically underwrite more loans to higher quality payers, which then means, theoretically they're paid back more consistently, quicker, they can give out, better rates as a result of that. And, they can just give out more loans in general. So that's more revenue for them. So, I get the value prop here, but it just kind of seems gimmicky to me in a way. Like, is their AI tool really that good? Is there really like a moat that they have? It's hard to tell, especially because the company hasn't been around for that long. There's been this huge run up, which I feel like is sort of due to, to some degree social media and, sort of it's definitely a stock that gets mentioned on FinTwit a lot. And again, it's, covered on CNBC all the time. But let's go over some numbers. Because I don't want to, like dump on them or anything. It's definitely a good company. This was their, as of Q2, they had this, they gave this outlook, and they were saying that for the year it was going to be 600 million. So that was like after the first quarter earnings. They said, here's what we think we're going to do in Q2, and here's what we think we're going to do for the full year, 600 million. Well, a few months later, when they filed Q2 earnings, they said, well, here's what we think we're going to do for Q3. Here's what we're going to do for the full year now, 750 million. That's a lot different than 600 million. And so for management to kind of come out with that guidance and revise their guidance, and on top of that, it's not just revenue, they're with margin expansion on top of that, 42% contribution margin, 10% EBITDA margin. Now they're saying 45% contribution margin, 17% EBITDA margin. So they're very confident, in their growth prospects. And I think part of that has to do with the acquisition of a company called Prodigy. I think Upstart is they're going to get into kind of the auto loan space, which should be a huge growth catalyst for them. But I guess what I'm sort of struggling here is valuation and, what's a good entry point? Just kind of questions of that nature. I mean, again, the growth is there. So they clearly have customers. They're clearly generating more and more revenue each quarter, and they're, allegedly going to expand their margins. So these are all great things, but here are, I kind of have this, I'm not actually going to tweet this, but this is just, some notes that I have. So, let's go down here. This is in the company's most recent filing. We were able to see that Cross River Bank actually originated about 60% of the transaction volume on Upstart's platform. So that was in their 10Q, their latest 10Q filing. And that's actually an increase from Q1 when Cross River accounted for 56% of the transaction volume. What's actually a little scarier is that 49% of the loan originations were derived from traffic from Credit Karma, which is a big partner of Upstart. And And the thing is, Credit Karma is actually owned by Intuit. And so as an investor, I'm kind of nervous that what if Intuit just decides to get into this space and leverage their own data from, their basket of businesses? They've got TurboTax, they've got Mint.com, Credit Karma, they've got all this stuff. Who's to say that they can't just basically decide to get into this market and give Upstart a run for their money? The other thing is that, larger bulge bracket type of banks like the JP Morgans, the Morgan Stanleys, Goldman Sachs, they have serious, meaningful IT budgets. And that could serve as a threat to Upstart because, even though Upstart has proven financial results, who's to say that, a Morgan or a Goldman or a JP Morgan is not developing their own tool to get into this space? I don't know. Now, the flip side of that argument is, well, would they just acquire Upstart? I'm not sure that would be, beneficial for Upstart. To be honest, I actually don't think it would really be beneficial at all if they were to get acquired by a large bulge bracket bank. At least right now. I mean, if they start to, if growth slows, I mean, at some point it might make sense. But that's kind of, where my head is at. Is, you've got this company that their trailing 12-month revenue is, 444 million. And you've got a 26, almost $27 billion market cap. And so, they're going to do a 750 million in revenue this year. Let's just be generous and, round that all the way up to $1 billion, which is being very generous. That's still a 27x, multiple. Now, I do want to give them credit. I think part of the reason that they're commanding such a high valuation is not just because the revenue growth is there. I mean, revenue's growing in the triple digits, but they are profitable. And so that's pretty rare for a company like Upstart where they're sort of going through this like hyperbolic, hyper growth type revenue and they're profitable. And so I will give them that. They clearly, have been, very good capital allocators. Who knows if they're going to reinvest that, money back into the business and sort of, sacrifice some short-term cash flow for longer-term growth. But, I think that's part of the reason why it's commanding such a high valuation. But think about it. I mean, this is double the market cap roughly of SoFi, and SoFi will do just about $1 billion in revenue this year. They have this unbelievable suite of products, and I'm not just trying to pump SoFi right now. I mean, for those who watch my channel, I have a couple videos on them and I covered them in my Substack. So I'm obviously very much a bull, a SoFi bull. But it's kind of crazy to me that Upstart's market cap is almost double SoFi's, even though they're smaller revenue. Yes, they're profitable and SoFi isn't. But I think that if you were to take both businesses and kind of just compare the two of them, I think SoFi's long-term growth prospects really outweigh Upstart's. I mean, most of their transaction volume is coming from Chesapeake Regional Bank, which is really just a community bank. They're not really doing a ton of business with the bulge brackets. They're working with sort of smaller, I don't want to say lesser quality, but they're just community banks. They're just not as robust of a client base. And then most of the volume is coming from, a company that's owned by Intuit, which could theoretically get into this tomorrow if they wanted to and leverage their own data. Why would they need Upstart? And so I do think, I sort of struggle with Upstart's ability to form a moat. Again, decent little company, kind of a cool product. Who knows if it's really legit, but they're doing 750 million in revenue and they're expanding their margins. And so they're clearly doing something right. I think the founders are very smart people. I will include a link to a video with the founders that I found on YouTube. And I think these guys are really thoughtful. But this is a company that would I buy at a 27 billion valuation, when it's up 20 points? No. I definitely think this is a company that you could trade around for sure. But, I'm not necessarily into that. And that's not really what this channel is dedicated to. I'm trying to find long-term investments. And I'm not, I probably would not own Upstart as a long-term investment. And, the thing is, feel free to comment and prove me wrong, right? I mean, that's actually what I want. I want people to, tell me why they think Upstart is going to be, the next best thing and, a great 10-year investment. I think this is a company that you could buy right now and make a pretty quick return on it. But I don't think it's a company that I would personally want in my portfolio, for the next 5 to 10 years. But anyway, I just wanted to cover it because I've been doing a lot of coverage on SoFi. Upstart is sort of a FinTwit darling, and so I figured I'd make a nice quick video and give you my 2 cents on that one. But let me know what you think in the comments. Especially if you're an Upstart bull, I'd love to hear what you have to say. Like and subscribe to the channel. And again, I'll include a link to my Substack where I do deep dives on mostly technology companies that that interest me. Totally free. So subscribe to that as well. Like and subscribe to the channel, and remember to comment. Thanks for watching, guys. Appreciate it.